Hello and welcome back to the channel. Today's video is on the topic of investing into UK property. Firstly, I'm going to start off by saying ignore all the noise you've heard surrounding the UK. Today, I'll be making the case for why, despite the political volatility the UK has experienced, why its property market is still one of the greatest in the world, particularly for those with a long-term investment horizon. Before we dive in, just to introduce myself, I'm Niall, based in the UAE. I'm an investment advisor working with high net worth investors globally, constructing their investment portfolios. Most of the clients I work with are on an advisory basis, but some of my clients that I do work with are very successful DIY investors and opt to work with me on a collaborative measure because of the fresh investment ideas that get brought to the table. And just on that note, if you are new to the channel, feel free to take a look at the other videos, as I do cover a wide range of asset classes, some asset classes you might not have come across previously. Let's begin. As a Brit, I have to say sentiment in the UK is as low as it's ever been, economically, socially, politically, and of course the weather never helps. But despite the noise, UK property remains one of the most resilient investments on the planet, still trucking along and providing investors with consistent returns, rarely posting a negative year. In fact, over the last 50 years, as a stat for you, only 4 of those have produced a negative return. Banking surveys suggest UK property remains at the top of the list of assets affluent investors are seeking to acquire in 2025, with a year-on-year 50% increase of foreign investment coming into the UK and a large $7 billion invested from the USA alone in 2024. And that's widely expected to increase by a factor of 2 this year. Now, why might that be? Let's start off with the security. One of the key factors underpinning the increase in demand for UK is the legal framework. UK consistently places first for having the most transparent real estate market in the world. You get clear title deeds, there are no arbitrary laws, and there are independent judiciaries which protect investors. And this really cannot be understated. Having a safe home for your capital is vital, and the UK provides that. For example, over in South Africa this year, we've seen the Government Expropriation Act, and many of those investors have already flocked over to the UK property market as a stable place to park their wealth. Speaking about foreign investment, there's a major currency play here too. Most international investors, in my experience, either earn their income in dollars or they have dollar-denominated portfolios. And over the last 10 years, we've seen the pound decline close to 20% versus the dollar, and the dollar is widely expected to depreciate even more so than it has this year. So this could be a great currency play for savvy investors over the next few years. There was a stat from the research house Knight Frank that suggested a dollar-based investor can buy close to twice as much prime London real estate than they could 10 years ago. And aside from the currency play, there's a timing angle too, particularly in London, with some postcodes down 10 to 15% off their all-time high in real terms, which is a rarity and presents a pretty appealing entry point. Outside of the timing aspect, the fundamentals of supply and demand couldn't help make a stronger case for the direction of travel in the UK. There's not just a supply shortage, there's a supply crisis in the UK. The population has ballooned 8 million over the last 20 years without a commensurate increase in property to cater for the new population. The estimated homing shortfall is 4 million, and only 200,000 homes per year are being built. The demand outstrips the supply, not only on the property itself, but the rental demand too. Rents rose by 14% in Birmingham last year and 11% in Manchester, which is phenomenal and unseen in most property markets. Occupancy rates in most major cities in the UK are 90 to 95%, which ensures the property is consistently yielding and is pretty much a landlord's dream. And just assessing the potential returns, looking historically, UK property over the course of this century has generated a price return on average of 5.5%, only posting one negative year out of the last 25, which was the global financial crisis in 2008. It's worth noting the 5.5% growth is on average. Cities such as Manchester and Birmingham on average have seen 8% growth per year. And of course, if you look in the right areas, that could easily be 12 to 15%. And where it can get very interesting is the leverage opportunity. The mortgage market is open for all international investors in the UK. Brokers and banks are very, very well versed with international investors. LTVs can come in as high as 70%. So a mortgage can leverage the price returns by a factor of 3. So that 8% annualized growth can very quickly become north of 15 to 20% returns per year. To wrap up the video, despite the negative sentiment around the UK, I believe the UK property market is completely detached as an asset class from the economy and will continue to grow in a linear fashion, just like it has over the last 150 years. That's pretty much it from me. If you would like to understand where the best opportunities are for outsized returns in the UK, navigating the mortgage market or handling the small matter of tax, do get in touch. And if you enjoyed this video, please do consider liking and subscribing. Thanks very much, and I will see you on the next one.